Good morning, everyone. It is August 14th. We are about 30 minutes before the market's going to open. We've had some economic news, and we could talk about that in a bit. That is moving stocks lower. I think we're going to open a little lower this morning following a day of mixed stock results. Tuesday was tremendous. A lot of stocks went up, and the stocks that went up probably the highest gave up some of those gains yesterday, while others did rally. The market did close higher yesterday, and on Tuesday, it closed substantially higher. So overall, it's been a positive week for investors to accumulate more appreciation and see their wealth rise. Yesterday, we had I thought, a really good live stream. Really felt like the content really dug deep into stocks, and you're able to see on this channel two different points of view on a stock. I'm going to look at the fundamentals, try to drive to a valuation based on free cash flows, based on looking at the intrinsic value of earnings per share, looking at balance sheets, while my colleague Daryl does the technical analysis, and I really like learning and seeing what he is seeing, which to me is behavior in the market. What's happening? What is he expecting the stock's going to do? Is it going to continue to rally up or continue to sell off? How you doing today, Daryl?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
And how are you making out this week with your stocks?
Doing very well. This past week has been really good for me.
Yeah. There's the good news is we got through earnings, and I call it good news because for 3 weeks I couldn't even keep up. There was days when we had like hundreds of stocks, hundreds of companies announce earnings, and a lot of big ones. There's no way I could keep up. But now we got kind of a trickling of interesting earnings. We've got some companies that look interesting. We started talking about United Healthcare yesterday. I'd like to talk about that again today, along with Novo Nordisk, and see how those stocks are moving. I want to look at some small caps that actually came out of the last couple of streams. One of them is Dave, Dave. Really interesting little company, and the stock's just flourishing. And then CRMD, which is a healthcare company with a terrific product, and they're seeing their stock price flourish. So I thought we could get our heads around those. We've got a bunch of other stocks out there too. I know that Cisco announced, Deere, NetEase, JD announced. Those might be interesting. So we'll just get going. Looks like for algorithm is on. Good to see you. Looks like you're becoming a regular. I really appreciate your attendance. Man, the attendees are flying up. Thanks, everybody. Everybody is in it to check out stocks today. And hey, Mike, the dividend investor guy. You got it. You got it, buddy. Understand. Good luck at work today. Good luck with your stocks. And if you would like us to look at a stock, put it in the chat. If you're a member, it just comes with your membership. If you're not a member, a $5 super chat. And I think you're going to get your money's worth. You're going to get full fundamental analysis from me, evaluation, and then Daryl will take a look at the charts and give you his technical perspective. So think about that if you'd like us to look at some stocks. So let's get going. I thought we'd kind of get warmed up by looking at recovering some of the ground we covered yesterday. Let's take a peek at United Health. Now, this one here is interesting because, this stock is a quality stock, still is a quality stock. I have United Health insurance. I've been a customer for a long time. I haven't noticed any change in their service. I've never had a problem with them. My wife and I raised 2 kids on United Health. And in general, we're pretty happy campers. Now, the stock's really fallen off a cliff. To some, they may run away from this. And for guys like me, I run towards it. I'm like, wait a second. Is the market offering me a really nice discount? Well, let's pay attention. Let's do some homework. And you're beginning to see a little rally, just a little one here. And this one here, this stock, in my opinion, is discounted by like 50%. And it's easy to prove that to you. It's a growing business. When you're growing top line revenue, that's a very good indication that your service, your product is liked by your customer. It's liked by new customers that are becoming customers. Your existing customers are buying more. It's just good. It's when you see a growing business, especially one that is this large, $422 billion in revenue. You grow 10%, you just grew $42 billion of top line dollars revenue. Okay. To me, that's a very good sign of a good business. You see a lot of businesses, especially older ones that are big, they can't grow. Costco and Walmart would love to have that growth rate. You also look at cash flow. They went from producing 13.6 billion in 2018 to 25 billion. When you see a company grow free cash flows, it's also a very good sign. This is an enterprise that is attracting more customers, keeping customers, and growing the cash flows. That said, I expect that United Health over the next 2 years is going to make it back to where the stock traded. And I would say that it's probably going to reach $600 per share because it's probably going to make it back to 500. I have a price target of 494. But the market, it doesn't have, what do you call it, a regulator or a stop order. It's going to keep rolling. It's going to say, oh man, this stock's really flying up, and it'll probably fly up to 600 again. Now, when is that going to happen? That's really hard to determine, but we are seeing a rally. 5 days. Look at that. 5-day rally. And look at the step up. This is 5 days of data. So I'm not, etching this in stone just yet, but I am using a pencil and etching it on a piece of paper saying, I think United Healthcare is beginning to rally. But let me take a step back and let Daryl provide some comments on United Healthcare.
Yeah, they did. There you go. We did close above the 20-day yesterday, and I do see a short-term. Let me just draw it on the screen. It'd be easier to see. A short-term trend, and it's broken out above that trend. Just keep in mind, this is only 6-week trend. I like to have much longer trends before I make big decisions. But for small decisions to step in, this looks like a pretty good sign to me that it may be reversing off the bottom. We do have RSI that's moved into positive territory. As of yesterday, we still have 21 minutes before the market opens. I'm looking at the pre-market, and UNH is up about 0.5%. They are still trading in bullish territory as far as the PPO, which is another indicator, much like the MACD. I prefer the PPO just because it expresses the values in percentage terms, so it's easier to look at one company versus the other instead of absolute terms. So that's why I use PPO. It's trading below the midpoint of 0, so it's in bullish territory. But you can see that it crossed over here. So the sentiment is less bearish than it was prior. So these are short-term and long-term averages, a 12-day and a 26-day.
Mm-hmm.
And the short-term, the 12-day moving average just crossed above the longer-term average of the 26-day average.
Now, as a whole, the market's supposed to open lower because we had producer price index showing that inflation is in the producer prices, and therefore the market's going to open lower for stocks. Interest rates on the short term are going to open higher, or really they're already trading. Bond market is already open. And having said that, back to UNH, on days like this, healthcare stocks tend to be safe stocks. Capital moves into healthcare because healthcare, we could have a recession, you're still going to go to the doctor. The doctor says you need to take this medicine or the condition's going to get worse. You're going to go get that medicine. You're going to go seek treatment. If your kid needs, to go to the dentist, and I can tell you from personal experience, and you need to shell out $2,800 to take care of your kid, you're going to do it. And you're going to take care of your spouse, and you're going to take care of yourself. So healthcare tends to be a safe stock on sell-off days. So if we have a good sell-off today, to me, in high level, it's only going to help United Healthcare and NBO. So this one here, let's monitor it because it'd be fun to watch it and maybe see something come together week after week.
Yeah, I agree with you.
The other stock, and I don't know if you're ready to talk about it, is I wanted to talk about NBO. And I'm ready to talk about it if you want to flip back to me, or if you can keep it and we can go over the charts first.
Okay, so it is trading below its 20-day, 50-day, and 200-day. These are all declining, moving averages. The 5-day has turned over. It looks like it bottomed out on August the 6th. It's been increasing since that time. Looks like they've had a lot of volume over the last, 2 weeks? So it's been above average volume. I have a 50-day average line here, so I can see if it trades above or below that average. The RSI was oversold for a week and a half, 2 weeks. It has come out of that oversold condition. We're still at 37, so we're not positive yet, which would be a reading of 50 or above. It looks like the PPO is getting ready to cross over here in the next day or so. If these daily prices keep moving up, these averages will cross over one another. Money flow's been negative and is still negative at the moment. For this one, we have a little bit longer downtrend to look at. This would be since December or so. And if I stepped out, I could probably find even a better line to do that. So for it to be really bullish, I think it's going to have to break above this trend line, which currently would be sitting right around 70.
So it's got a ways to go before it
does, in my opinion.
Yeah, NBO is not where United Healthcare is. Let me flip back to my screen. So NBO, pharmaceutical company, very high margins, very good free cash flows, and their stock sold off more than 60% the last 12 months. I'm seeing a blended 43% discount. Their cash flows calculate in my model to be 34% more valuable than their current stock price. And then when I do an intrinsic value of their earnings per share, the future earnings are 55% more valuable than their current stock price. So in general, I have a valuation that looks good on NBO. They also pay a dividend, but not a big one. It's 2.3, I believe. Yeah, 2.3% dividend. Not bad. Gives you a little income. But you look at, you receive a little income. You see this stock's just been beaten down. And it's really this is like a pretty good looking mountain. It's like the mountain at Disneyland, the Matterhorn. And the stock really flourished because they have that weight loss drug. And once they reached the top, they really began to sell off because they've seen competition from the compounders, companies like Hims that are using, I think, some gray areas of the FDA guidelines, I guess, laws, and they're able to serve customers by compounding what they believe is unique formulations for that particular customer. I think that's going to be settled in court at some point because NVO and Eli Lilly will probably want to defend these patents that they spend a lot of money trying to get to. But looking at the fundamentals look good, but it might be a little early on this one. It's selling off a little bit in the pre-market. And this one here, I'm also following because I think at some point this one will be a good buy for me. If you consider the stock made it up to $142 per share, down to 50. I think it could get back to 100. And it can get back there and probably just be okay. In fact, we'll look at Cisco in a little bit. Cisco, I think you could see similarities in the way that, these bigger, older businesses, they sell off, and they sell off so much that they offer investors a way to really have good performance if you buy at the right time, you do your homework. And I'll point that out when we look at Cisco. So NVO might need to stay on the stove a little longer, just let it simmer. It is a good business. They are growing that top line, which looks good. They do have opportunities to grow globally. I know they're trying to grow in India, as an example, and they have one main competitor, Eli Lilly. The reason the stock really rallied about a week ago is that their main competitor is Eli Lilly. The weight loss drugs, both for Eli Lilly and for Novo Nordisk, are injectables. The patients will inject themselves with this particular medicine. Well, Eli Lilly was coming out with a oral version of the drug, and they thought that would be more convenient, more popular. Well, the trials of that particular drug didn't come out positive for Eli Lilly. So it's deemed to be, hey, it's not going to work. So it caused a rally in NBO because the demand for injectables is going to be there. So looks like Mike is in NBO, and I also own NBO. It's a smaller position, but I'm ready to deploy capital if I see the right situation. And we'll see if it rallies today. I think healthcare stocks may see a rally since other stocks are selling off.
The interesting thing about that trial is it wasn't that it was not effective. It was 12% effective. The market was expecting 15%. So it came in a little bit below target. That was an interesting point about that trial.
Just the one thing I would disqualify myself as is I'm not a biologist. I'm not a pharmacist. I'm not a chemist. And I don't know if it's like between 12 and 15%. If to a doctor that means, oh yeah, it's complete failure. I don't know. You know what I mean? It's kind of like in like aerospace. That makes a big difference. That's the difference between the space shuttle blowing up and making it to space.
Yeah.
In, I don't know, building a house. Well, so the wall's a little bit, off. Who cares? It's still a wall. It's still functioning. So it depends. And I don't know. I'm not qualified to tell you, well, the difference between 12 and 15 is big. But the market certainly reacted like it was substantial. Like, okay, that's not going to work.
Yeah, you kind of have to compare that to, do you like needles or would you prefer taking an oral?
Yeah, I'll take an oral. Thank you very much.
Yeah, I'm a diabetic, so I inject myself every single day. So
Right.
I'm not afraid of needles at all. But I know other people, that's just a terrifying thought.
I'm between terrified and okay with it.
Yeah.
Depends on the size of the needle, of course.
Yeah, that's true.
If you come at me with like an ice pick looking needle, I'm like, whoa, hold on a
Mm.
second. Is there an oral version? If you come at me with like a tiny little needle, all right, let's get this over with. But hey, Mike, the dividend investor guy, wants to look at LNTH, which is kind of it's in the healthcare space. It's LNTH Holdings, and this guy has been having a rough year. It's down 44%. This is a smaller cap, 3.66 billion, and we'll look at the fundamentals in a little bit, but it's down in the 1 year. Year to date, it's down 40%. Holy smokes. That's a pretty good haircut on this stock. And they announced on August 6th, and it looks like the market didn't like the earnings. We'll take a peek at the earnings in a little bit. PE is 14, forward P is 10. Analysts think it's really discounted. So let's take a look at their revenue. Yeah, their revenue is really slowing down. That's what the market is freaking out about. And it is. So this is reason for a market to freak out. Okay. Investors bought the company maybe middle of 2024, and they thought they were buying a 20% grower. Okay. So happy to buy this small cap, 20% grower. It is profitable and has free cash flow. I know that because I've analyzed this company in the past. And then you fast forward and it's not growing. Well, the whole definition of the business is different now. So I can understand investors saying, "Oh, my whole valuation's changed because when you were a 20% grower, I would grow your cash by 15, 20%. If you're a non-grower, I'm not growing your cash. Why would I grow your cash? There's no reason for me to grow your cash." That makes a big difference in evaluation. So it's good that they have, and it also means something else. They have good free cash flow. You see, this cash flow is also going down. So there's a lot of red flags going up for LNTH. We got revenue, it's declining. We got cash flow, it's declining, double negative. Gross margins are staying at the same level. That looks okay. They are profitable, but their valuation, okay, it's to keep it simple. In 2024, I would have taken 112, multiplied it times 20 or 30. Let's say I multiplied it times 30 to keep the math easy. It'd be probably about a 30, 3.4 billion dollar market cap company plus cash. And today, if it's not growing, I would multiply times 10. So it really changes the valuation and it brings it down. It's 3.66 billion. I would not invest in this company at this time because I need to hear from the company, how are you going to grow in this business? Are they contracting because a new player has come out with a better drug? Is their drug not working? Is the addressable market contracting or maybe not as big as we once thought? There's just some pretty fundamental problems that could exist. You'd have to do the homework on it to find out what's going on with this company. Why is it not growing? But it is a big red flag. I wanted to look at their balance sheet just briefly. Yeah, they have a little bit of cash, not a whole lot of cash. Yeah, this one is kind of in a no man's land right now. I don't see how the stock's going to pick itself up unless they start to grow. If they start to grow, okay, now we got something. I would study their last earnings and see what are they talking about for growth? How are they going to grow? Do they have something in the pipeline from a new drug where that new drug is going to come in and get commercialized and start generating new revenues? That would be a very big positive because they need a positive for the stock to move. For now, I don't think it's going to go anywhere if there's no big change in the overall expectation of the business. What do you think about LMTH?
Well, the interesting thing that I'm seeing here is it was selling off going into the earnings. So money flow was negative and it dropped, and somebody stepped in buying big time. So the money flow is very positive right now. And accumulation over the past year is at an all-time highs. I don't know who's buying, but somebody is buying at these prices.
And it's a small cap, right? So does volume have anything to do with that observation you have? Is like it's very little volume, so if anybody buys, it kind of triggers a spike in volume.
They did have a spike in volume. It was 12 to 1. So it was 12 times higher on the announcement date, or the first trading day after the announcement date. But it's dropped back down, but it's still trading above 50-day average volume since the day before earnings.
Interesting. All
The
right.
chart overall looks kind of rough, but that's one thing that stuck out. I'd like to take a little bit deeper dive on that at some point and see who's buying.
All right. So moving forward, can we take a look at Cisco? They announced yesterday after the market closed, and man, the stock is selling off. So if you want to load up Cisco, you can start, and then I'll get into fundamentals.
It is trading. This is at the close yesterday, trading above the 20-day, 50-day, and 200-day, which are all rising at the moment. RSI is getting a little bit weaker going into the earnings. The PPO is positive, but decreasing slightly. The two moving averages are getting a little closer together. Accumulation was at an all-time high just 5 days or so ago. Money flow has been positive since the beginning of May. It is outperforming the SPX over the year by 33.9%. It's outperforming the technical sector by 26.1%, outperforming its industry by 7.7%, and the industry is outperforming the SPY by 24%. So we could look at the intraday chart real quick and just see what we're seeing. Yeah, so it's been selling off most of the pre-market, and the market opens here in less than 1 minute. Looks like about 8 seconds away. So we can see if that holds or whether it starts reversing.
Well, on a day like this, I think Cisco's going to sell off. I don't know that tech stocks are going to do great today. My guess is they're not going to do well.
Yeah, they're down even more as the market opened.
Yeah.
You can see that here.
Yeah, interesting. So let me flip over to my side and I'll show you what I've got from a valuation perspective. So Cisco is 15% discounted in this. I use Google Finance to update stock prices. It's not updated. It updates like every 15 minutes. So it's probably going to be more like 18 to 20% discounted in 15 minutes. Now that's a decent discount, but I'm not overly excited about the Cisco business. It's a single digit grower they are growing a little bit better. They last 3 quarters, they've grown about 7 to 8%, which is pretty decent for a big business, and they are generating more cash. I'm not compelled to buy it, but when I look at Cisco, this is one of the investments I like making is, and I'm probably going to be better off looking at this chart. So Cisco is a very well-known commodity. They do primarily network equipment, network technologies, and so forth. And the stock had a high point and then it sold off. The market just hated it. Now, the market hated a lot of stocks in 2022. It kept this stock down for a long time, but then it just really rose. And it rose to closer to its intrinsic value. And when I look at Novo Nordisk, I feel like at some point it's going to do this. These stocks tend to do it because investors will find reasons to buy a very well-known company like Cisco, and they certainly did that. But the gains on Cisco are in. I'm not a buyer because, hey, I should have been a buyer back in May of 2024, but I was buying other things. Some of the other things I bought did great. Some of them didn't. But this one just didn't make it to being a buy stock for me. And the Cisco business, just in the context of AI and all these like really impressive new things, Cisco just doesn't have the pizzazz, the specialness of competing for oxygen in the universe here against AI, against some other things that are really fantastic. So interesting to see Cisco. It looks like for the day, is this correct? It's only down 1.45. Is it bouncing back? Yeah, it's bouncing back. It was down 3.5%, right? So it's making its way back.
Yep.
The markets are kind of recovering a little bit. It's not terrible. One thing I did notice was oil was up. Oil's up 1.5%. So I think oil stocks like Occidental and Chevron are going to have a good day. And looks like the stock market's going to have a red day, but it's not terrible yet. And the Russell will eventually update. It usually takes a little while before it updates, but it's not going to stay green. I don't expect it to stay green. All right, so that is Cisco, and Cisco pays a dividend. It's got a decent discount, but just not overly excited about Cisco. All right, so it looks like Mike, you wanted to look at NICE Software. Let's take a look at NICE. NICE is a small cap. They announced before the market opened what's going over at NICE. Whoa, NICE is not having a good morning. It woke up with a big migraine headache. Not doing great year to date, not doing great for the 1 year. This is a software company that I've analyzed in the past. I'm going to call it a small cap, 9.16 billion. And they provide software for call centers, for customer service operations that companies operate. And what's interesting is the companies that operate in call centers are really getting discounted because AI is supposed to replace a lot of the people in these call centers. So therefore you won't need the software. But here's what I rationalize is who's going to sell companies the AI software that will replace people? It's my opinion that NICE and Salesforce and other companies are going to be the ones to sell that AI software. A customer service agent is not going to, open up ChatGPT and say, "Hi, thanks for calling," fill in the box. 3M, how can I help you? and they ask questions, and then they just ask ChatGPT. ChatGPT does not know. You have to have an AI agent that has access to all this private enterprise data that, in the case that I'm using, or the example I'm using, 3M has. So companies that like Salesforce and NICE are creating all these agents to offer companies a way of deploying these agents that are just software driven. You don't need a person in seat to take that call. Well, they're going to be able to charge money for that, right? And they might even grow out of the AI era. So that's my rationale. And FYI, I'm a software guy. I've worked in software in this particular area for about 25 years. So when we look at their growth, they are growing. So it's not like, oh no, AI showed up and nobody's buying our software. Now this is the quarter before the one they just announced. And that's not a good quarter, by the way. They were growing at 14, 15, then they dropped down to 6. That's not good. That might explain some of the sell-off. Let's see if we can see here. So they grew 12%, which is much better than that 6%. So that looks pretty good. They're a $9 billion market cap company, almost $3 billion in revenue. PE looks pretty reasonable. Now, when we look at, so they got back to growing 12% on the quarter. That's good. And free cash flow, 835. That's very good. Gross margin, 67%. It's good. So this here is a discounted software company. It's a smaller company, but the market, the story that the market's investing in is AI in the data center, right? But this era is going to make businesses like NICE and Salesforce and ServiceNow, those are 3 competitors in the same space. It's going to make them reinvent themselves and kind of recreate themselves so that they can compete in this new era where AI agents will be a part of their portfolio that they offer customers. Like, hey, if you want AI agents, we got them, but we're going to charge you for them. So their revenue should go up. So this is a good stock. I believe I have a valuation on NICE. And they're discounted by 36%, which is a decent discount on a business that has good margins, good cash flow. It's just caught right now in outside the story that the market is investing in. It's not in the data center. It's the general story is AI is going to disrupt a lot of the human executed, human provided services like call centers. I kind of agree, but you're still going to have to sell the technology. I guess an example I would say is when you look at a Waymo car, those robo-taxis. Now, if you have an Uber, you have a human driver and that person picks you up in a Toyota Camry. The human driver paid, I don't know, $20,000, $30,000 for that Toyota Camry. Well, the Waymo unit costs $250,000. No human involved. That's a pretty good chunk of capital for all the technology and everything. So there's a little bit of what point is the return on investment there for businesses? Because again, 25,000 versus 250,000. That's a pretty good outlay of capital. So when we look at call centers, the businesses will have to weigh those 2 decisions, which is, okay, so at what point will we have the right return on investment to cut over to AI agents, and will our customers like it? I know some people don't like dealing with AI. So that's NICE software. Can you show us the fundamentals on NICE?
Sure. Technicals. Here's an interesting candle pattern. That 3-day candle pattern kind of told you that there was some risk here with the pullback, and sure enough, it happened long before the earnings. So that's kind of an interesting pattern. We do have a low RSI 32, not quite oversold, but getting there. We have a weakening PPO is in negative territory, and that looks to be getting worse. And the money flow is kind of in no man's land at the moment. We've had a lot of decumulation distribution here over the last couple of months.
Okay. These, I think small caps are, we'll see how they perform. With lower interest rates, they should perform better, but I think it's all industry based. The software business has not received a lot of love from the market. If you're a pure play software company like Salesforce, Nice, it hasn't been a fun ride for the last year. You have to have like an AI catalyst. Like Palantir has a pretty good one. Like they're using their software, and police departments are able to have the software basically do surveillance, automated surveillance, and then say, hey, we think a bad guy's on the corner of Second and Broadway, and then boom, they go try to find the bad guy. So that's the kind of stuff that Palantir is offering, and it has that AI component. So the market really is excited about that. But the businesses that are kind of, I'm going to call them legacy businesses, they have to prove that they're new businesses. I think Salesforce is doing a really nice job, by the way. I'm seeing what they're doing. I'm like, they're really an AI company, but they don't get credit for it. I think Nice is an AI company, but they're not getting credit for it. If you visit their website and you understand their product, you're seeing that they're really advancing their AI capabilities. We'll see if that ever makes sense to investors and they realize, hey, we should be buying Salesforce and Nice. We will see that in the future. But for now, this thing is selling off. It is discounted, and we'll see how they make out long term. So kind of moving along, D-Local, DLO, they announced yesterday, and the stock's up 22%. D-Local is a payment processor, and they are doing great. Where are they headquartered? They are headquartered in Uruguay. So they do payment processing down in Latin America, and boy, they are having a good day. What are you seeing on the charts?
Yeah, it looks like the market was kind of anticipating that. It was definitely going up for the last week and a half, and they had a pretty big day yesterday. Big volume on yesterday. So somebody knew something.
Well, they grew revenue in the quarter by 49.7%. That's
wow.
pretty good.
Yep. Yep. So their RSI is currently an overbought, but it looks like it may be pulling out of that a little bit as I'm looking over here in this magnified portion. The PPO did move into positive territory. It had been in positive territory for quite some time, but it did cross over the midpoint, which kind of starts the baseball game over again. Accumulation, it's pretty much been in distribution mode almost all year. We do see a spike here in the last week or so. Performance has been really good across the board, beating the S&P, beating technology, beating its industry group software, and the industry group is outperforming the S&P. Looks like a pretty strong chart at the moment.
Yeah, looks great. And I have DLO evaluation on it. Now, this one isn't I need to update this. So it's a little dated, but it is slightly discounted. DLO is a couple of things. It's a payment processor for sure. It's in Latin America, and um, I'm thinking that Latin America is a pretty good place to be. I'm an American investor. I have most of my investments here, but it's good to diversify a little bit. And diversifying in Latin America is a good idea for me because that population continues to grow. And a lot of people are, for the first time, getting a handheld, smartphone. They're getting PCs. And I know we in the US, I mean, this is where it kind of started, right? So we've had PCs in our hands for a while. Well, a lot of folks down there, they're for the first time beginning to use their phone for payments, for banking, and so forth. So I think there's a lot of organic growth, and there's a lot of people using DLO for their payment processing down there. The business, $4 billion company, revenues 8.63. So nice small cap. And these small caps can really, really flourish. Over the 1 year, this is 83%. But look at this volatility. This is boy, I would like to call it a roller coaster, but I don't think the passengers of a roller coaster that had this kind of drop would survive. I don't care if they have their seatbelts on. That's a pretty drastic fall from $14 to $8 over the course of weeks. That one hurt. But from there, it's picked itself up and back to 14. Now this chart, that's a unusual looking chart. It's like a big giant wall going down and a big giant wall going up. So this business, it kind of makes sense because it's small cap, it's down in Latin America, so it's surprised to the upside big time. And it was growing like these single digits, right, for a couple quarters. So this came out of kind of nowhere, and it really grew nicely. Q2 was a down quarter. It was a combination of, see the growth here. It only grew by 6% when you compare Q2 of 24 to Q2 of 23. So that low compare enabled the company to really show a really high growth rate if you compare the same quarter to the previous year. This is a payment processor, so the margins are going to be somewhat low compared to like a software company or pharmaceutical company. So that's understood. PayPal's about the same. Cash flow did grow, looks good. But I'm not seeing enough value for me to take the chance. I'm in Mercado Libre. Mercado Libre does have payment processing, and I think I'm going to stay tight there. I don't like stocks that have this type of volatility because these are big surprises, right? And I just don't, I'm not confident about that. I like smooth data. Let's see what Mercado Libre looks like. Mercado Libre is both an e-commerce site and a payment processor now. Now their chart's not perfect, but a little better, and has, an upward rise. It has had some sell-offs that provided a good chance to buy the stock, but it isn't as drastic as DLO. Over the 5-year, this is a nice looking chart here going up. It does have some pretty good sell-offs in between, but I kind of think these are good. Enables me to buy into the stock. So I'm going to keep riding Mercado Libre because it has better diversification. It's a bigger company. I feel more assured in my investment with Mercado Libre. It has exposure to Latin America, so I'm able to, okay, Mercado Libre has an e-commerce business, very successful. It has a payment processing business, successful. And I'll stick to Mercado Libre. This one, I think, congratulations if you own the stock. Awesome day, 24%. Nicely done. And that is DLO. And I think Dwayne is a member of the channel. He's in DLO. Congratulations. This one here will buy you a premium drink at Starbucks with all the gains, of course. So good one. Very good one. Glad somebody's making a lot of money today. DLO CEO came from Mercado Libre. Look at that. came from the same kind of ecosystem there. That makes sense. Probably a good manager of the business.
What's interesting is even though those swings in the market are so large, I looked up the beta for this stock and it's only 1.07.
That's surprising.
It is a bit surprising.
I would have thought the beta would be like 2.
Yeah, that's what I would have thought as
I mean,
well.
this part of their chart looks okay, but this part is like, whoa. And then this part is another positive whoa. Long term, this has not been a fun ride for anybody that bought near its IPO. And near its IPO, you're losing money. But that I don't buy near the IPO. I'm very careful because most IPOs look like that. Interesting. Well, I'm glad that Dwayne's in the stock. Congratulations to everybody that owns DLO.
Yeah, the beta on Melly is 1.46.
See that? To me, that's reversed.
Yeah, it's
If is bigger, more diversified, it should have a lower beta.
Yeah.
But
Crazy.
Oh well. All right, so let's cover a couple of exciting small caps. And one is this company, Dave. And actually, I have Dave over here. And Dave is a new financial services company. And they remind me in concept to with SoFi. How SoFi has come out and they're like a different breed of a bank, of a lender, of a financial services company, kind of doing things, with a lot of technology in the process. The experience is very advanced and so forth. Got it. They also are, I think, solving a lot of the frustrations that people have in case of like student loans and a variety of things. And Dave is right in that environment where they're doing things that they're a bank without any locations, but they're not making themselves just like any typical bank. They are very different. And I like that a lot. Robinhood has really done this well to come out with a company that is not starting with the business model that's been around for 50 years. They're like, no, we're starting with obsessing with the customer and then reverse engineering what we're going to do and trying to see what are the things that customers would really like to see, the market would really like to see, take those ideas and then reverse engineer it. Good savings rates, you can have cash advances and so forth. Now, the concept is fresh, it's new, and the stock is cranking. Holy smokes. So this stock, needless to say, is making it happen. $2.65 billion market cap. It's gone up 550%, and it's still $2.65 billion in market cap. We're at $433 million in revenue. So you're still only paying like 6 times revenue. Not bad. PE is 51. We'll see what their growth rate is. Forward P is 24. Analysts still think it's discounted. And the reason that PE isn't completely outrageous is the company is growing at 48%. And you see their growth rate is accelerating. So as people find out what Dave's all about, probably the younger generations, like, man, I hate the bank experience. And I'm 56 and I dislike the bank experience. I don't know if anybody out there likes going to the bank. I don't like going to the bank. It's not quite as bad as going to the dentist or the Department of Motor Vehicles, but it's kind of there. where these guys are saying, hey, we're going to be all digital. As more people find out, open up accounts, start moving their money there, transacting there, these guys are making really good advances in revenue. Again, revenue, it tells us, are more customers going, are existing customers using more? That's a very good sign that this business is prosperous. So that looks great. Now, these guys, when I reviewed them a day or two ago, I had to determine, are they a bank or are they more like a PayPal or a Robinhood? And they're more like a Robinhood PayPal. So I take free cash flow into consideration. If it was a bank, it'd be book value method, but they really don't run as a bank. They're doing more services than they do act like a bank. Gross margins are good at 67%. As they get bigger, see how they expanded that margin. As they get bigger, this is going to expand. Their operation's going to have more economies of scale, and they're going to do better. So profit margins are there. Free cash flow margin is stupendous. Look at that, 44%. That is great. So this business is discounted, but it's down today. So I'm going to be a buyer of Dave today. I'm trying to start a position, but man, these companies that are doing this, they don't make it easy on a guy. Of course, if I would have woken up to this stock back when it was $70 a share, boy, that would have been nice, huh? But I don't have a time machine. I have a right now machine, and I think today I'm gonna be a buyer of Dave, because when I calculate the valuation of Dave, I have a really big discount. This is when I was doing Robinhood 2 years ago, I was getting these kind of numbers, and I'm like, these numbers they're kind of hard to believe. And guess what? Robinhood's up 700%. I guess the numbers were believable. So having the experience of bought into Robinhood and Coinbase, these new generation financial services companies, they're disrupting, and they have a big market to disrupt. You've got, everybody needs banking, everybody needs these types of services. And you look at big banks, they're not growing. Like I own Citigroup. They're the best in class. They're growing at like 5%. JP Morgan's barely growing. You look at Bank of America, not growing. And so those banks are not growing. They're gigantic, but they're not growing because customers are like not excited about that. So Dave is going to be a pickup for me. While you share your screen share, I've got my brokerage account open. I think I'm going to put in my buy order on Dave. And this came out of the live stream. I've picked up some really good stocks in live streams and on the member calls, because these small caps, we look at them, we analyze them, we dig deep, and bingo. That's where I found A-Lab. I mean, I can go down a list of 10 stocks that have made me money. They come out of these live streams and out of member calls. So what do you think of Dave?
Yeah, we talked about the chart yesterday. Does have an RSI slightly below 50 at the moment, and the PPO is negative, but the chart looks pretty good overall. Looks like 243 could be a short-term resistance, and it did get up to a high of 286 or so. So it did have a big breakout at the beginning of May, right around, maybe the first or second week of May. So anyway, the chart looks okay to me. Not great, but definitely looks okay.
All right. I just bought shares of Dave. So we're off to the races. The next small cap that I've been trying to get myself into, but yesterday had a terrific day, is CRMD. And this stock is in healthcare, and it's booming. just doing great. Looks like. So while you get that set up, Mitch, good to see you. And eToro, we're going to look at that. Man, eToro has been just really in a slump. It's down like 25%. So we'll take a look at that. That'll be next up, Mitch.
So CRMD, Coremetics, is trying to get back up to its declining 50-day, which is currently sitting around 1243. It is above a 20-day average, which is rising. 200-day looks like it's declining slightly, but it is above that, and the 50 is above the 200. We've had a lot of volume over the last 5 days. The RSI is sitting above the midpoint, so currently in bullish territory. PPO doesn't confirm that yet, although we did have a crossover, but we're still in negative territory. When both of those are in positive territory, you have a really strong confirmed buy signal, but it still looks good even at this point. Accumulation it's been under distribution here since about the first week of June, and it's outperforming the S&P by 108%, the healthcare by 177%, its industry group by 193%, and the industry group itself is underperforming the S&P by 28%. So it looks like might have some good news here over the next short term, next month or so.
All right. I just bought shares of CRMD. So you can't say that I don't listen to you, Daryl. All right. So let me take a look at CRMD. I also have very good things to say. Overall, I see a 54% discount if I value the company on cash flows as well as the earnings per share. This company is growing really, really well. So there's still a small cap, less than $1 billion in market cap. Over the 1 year, it's only up 235%. It's had some volatility now. It IPO'd, it went up like a bottle rocket up to $17 a share, and then it came back down. But the 1 year just looks fantastic. It's had some really good pullbacks. Man, I need that time machine. Can I go back in time and buy the stock at 586? I cannot, but I can buy it today, and I just bought it at $12.20. The company announced earnings on August 7th. PE is 15. Forward P is 5. And this is a business that just went commercial with their medication, their treatment. So we got to look at the quarterly because this is a brand spanking new business. It's almost like we just took it out of the package. We're reading the instructions on how to operate this thing, and they've gotten up to a run rate of $160 million in revenue. They got up there quickly. If they can expand their distribution, that'd be great. Look at the gross profit. This is what was interesting is gross margins of 95%. I don't see 95 all that often. I think Visa is like a 90-some% gross margin company. And their operating margin, profit margins just really, really high. Free cash flow margins really high. So that's why this business is getting bought up by investors. They're sitting there going, man, this thing's printing money. And it's small. It's tiny. It can move to 2 billion in market cap and probably still go unnoticed by the market, the general market that's hanging on Apple to see if they're ever going to grow, or looking at, NVIDIA to see if it's going to continue to go up. These stocks are just not going to get the airplay on CNBC or anything, but hey, we can make money on them. So this is looking terrific. We'll see where it goes. This one came out of it came up twice in the last week. It came up on the member call on Sunday, and then it came up on our live stream. Did it come up on our live stream yesterday? I think it did. I know it came up on the live stream either yesterday morning or on Tuesday evening. And I tried to buy it yesterday, but it was just yesterday it went up too much. It was up like 5% or so. And it's had a really nice 5-day from 10 to 12. So it's up nicely over the 5-day. So that is Core Medics in the healthcare space. Very, very good. Good to see some small caps. Okay, so where would you like? Would you like to pick a stock that we can move to next?
We still have Deere and RMBS.
All right, let's go to John Deere. Deere and Company. These guys do heavy equipment. I know them as the equipment that farmers use, but they also do construction equipment, if I'm not mistaken. Over the 1 year, boy, this is terrific looking. 37.55. They pay a 1.34% dividend. This is a business that a lot of people can get their heads around. I mean, you think about the Midwest, probably everybody knows Deere. A lot of farmers own Deere equipment, so they can put their heads around that. The 1 year looks terrific. The 5 year looks fantastic, 154% for a very well-known company. Now, today it's under pressure, down 6%. What's going on? What happened? Not enough tractors being sold, I guess. So they lower profit outlook, challenging economic environment. Now, I would say that the tariff tension would likely affect this company in a couple of ways. Principally, if Deere wanted to sell equipment to, let's say, farmers in China, that became harder because maybe China's turning around and saying, well, when you send your tractors over here, we're going to charge you, I don't know, 30% tariff, 50% tariff. I don't know what they're charging. Same thing with Europe, right? Like, and I think Europe has plenty of tractor companies, but just to use the example, if we're initiating a tariff argument, I think Deere is going to be caught up in the middle of it because they have a product that can be easily tariffed. So I think that's part of what may be a little tougher for them. Inflation probably is driving up their price a little bit. But food's food. We need food. Food's never going to go out of fashion, and farming equipment is always going to be needed. And I think this one's going to be, for an older investor that wants something that's going to, a company that's going to be around in 50 years, this is probably a pretty good idea. It's a $130 billion market cap, $45 million in revenue, PE 23, forward P is 24. Now, a business like this, I'd like to pay more like 16 to 18, because when we go to growth, this is cyclical. You see the cyclical nature of their business. And these growth numbers look fantastic, by the way. Like here, 21, 22, 23. They really grew nicely because they have a big number to grow on, but they've really contracted. Wow, look at that contraction. That's a pretty strong contraction there. And in the quarter, I don't think that's the most recent quarter, but you could see, man, there's a lot of red on the screen. That is no bueno. So I'm surprised the stock price isn't selling off more than it is over the long haul, like the 1 year. We just saw a lot of red, and this thing is up. So this one here would be a total pass for me. I know what they do. I like them. I think they're going to be a business that's going to be around for a long time. But this should be, we should be seeing a sell-off in the stock, and we didn't. And Why is that? Well, name recognition. People are very comfortable with Deere. They're like, hey, this company's going to be around for 50 years. Don't need to sell it. They're having a bad period in their business. Okay, that's cool. But if you have poor performance, but the stock price doesn't drop, I'm an investor. I don't want to buy a poor performing business at a premium. If it's performing poorly and I think they're going to improve in the future, I want a discount. That's the way I invest. So that's why I would be like total pass. I don't want this business. I got to go find growing businesses. Cash flows haven't expanded much in the last couple of years. They did have a poor year in 22. Maybe they had to put a lot of capital into production. You see that from 20 to now, no growth in cash flow. Another yellow flag. And then their margins are what you would expect. They make a product. They have to put material costs into it. They have to put labor costs into it, distribute it, and so forth. So this one here is not my cup of tea, but I'm sure it's somebody else's. What do you think of Deere?
Yeah, I was looking at Deere and Fast Grass, and they confirm pretty much what you're saying. They're a little overpriced at the moment. Their fair value, it could be a total annual return of negative 20% over the next 2.5 years. Go back to the chart. It does look like when it gets close to the 200, it's not a bad time. If this is your cup of tea, it's not a bad time to buy, and it is approaching that 200-day again. The RSI is in negative territory. The PPO is also in negative territory. Accumulation's been flat since February, and it is outperforming the S&P by 17, outperforming the industrials by 13. It's outperforming its industry by 10.7, and the industry is outperforming the SPX. So if you're a buyer, I'd keep an eye on that 200-day and buy anywhere close to there. Look like you might be in pretty good shape, but it doesn't. Overall, the fundamentals I don't think supports this price.
All right. So I wanted to move to eToro. It's a question that, or I should say, Mitch, who's a member, asked about eToro, and eToro has been just it's a stock that came up a few weeks ago on an investor call, and it had some interesting attributes to it that I'll kind of elaborate. But it's just been a dog for the last couple of weeks. What are you seeing with eToro?
Yeah, I would have looked at this about 1 second and moved on. But I haven't looked at the company at all. But if I saw that chart, I would have just moved next. So
Well,
anyway,
I'll make a note next time. I gotta go over the charts with Daryl before I buy.
yeah, this one looked well. It hasn't been around very long, but yeah, that looks pretty rough to me.
And
The RSI is oversold at the moment. PPO is negative. Money flow is negative. Accumulation is actually being distributed. It's at the all-time low at the moment. Underperforming the SPX. The financial sector underperforming its industry group, while the industry group itself is outperforming the SPX. So there's probably some others in this industry group that are performing much better. We could look at those if you want to.
yeah, let me show you my screen, and then we
Okay.
can maybe come back to what you wanted to show.
Okay.
So the story behind eToro. So eToro, we looked at, and the fundamentals look pretty decent if you look at growth, profitability, and so forth. Now, the peers that we thought, well, eToro is a brokerage. They do a lot of crypto. They predominantly operate in Europe, like the UK. And so we thought, okay, well, it's an idea that is working for Robinhood, Interactive Brokers, Futu. These have been really good winners for the last year, terrific winners. So, hey, this is just a different version of Robinhood, Interactive Brokers, or Futu. Futu being in Hong Kong, so servicing Asia. So that was kind of part of what could have been what it was the thesis of. Okay, so I started a small starter position, right, just to kind of watch the stock, and since then it's just been like terrible. Over the 1 month, down 17%. So this is stock investing. I don't know why the market does not like eToro, but there's something there that I'm not putting my finger on, because when we started looking at this stock, this is a new issuance. It IPO'd May 14th, 2025, not too long ago. And maybe I broke my rule of don't buy near an IPO, although this one didn't get drummed up, right? When we value eToro, it has a good valuation because it's growing. It's growing really well. This one here, I think I'm going to sit by the sidelines, watch it, and maybe at a later point, if the market starts to like it, maybe that's the right time to buy it. I most definitely have a discount on eToro, but the market just doesn't care what the valuation is on eToro. It keeps buying Robinhood, it keeps buying Futu, but it keeps selling eToro. So, hey, I'm not going to argue with the market. I'm just going to move on. I'm going to watch the stock, see if it ever becomes something the market wants to buy. Maybe then revisit it. For now, I own Robinhood. I own Futu. I'm going to keep making money on those. And I think you wanted to share something else.
Yeah. So what I'm doing is looking at the industry group. So we're looking at the industry group that eToro's in, which is the Dow Jones US SB, which stands for investment services. So if we go to the sector and drill down to that industry, I don't know how many are in here, 54. There's 54 companies in this industry. eToro is right here sitting at 0 year to date. You have had some that underperformed it, but you've had probably 45, 43 or so that have outperformed it, some very significantly.
What's the number one? MFI?
Yep.
Wow. Market cap, 93 million. Is that right?
Yeah, it went from $5 a share to 45 right now.
Yeah, it's a super small cap. Interesting.
Robinhood is here.
Yeah. Up fintech. Yeah. So I think, you can't like hit a home run on every single stock, but you got to have one thing I would say is have a process, right? For me, the process is look at fundamentals, understand the big picture. eToro, the big picture seems pretty rational. I mean, Daryl just showed a bunch of companies are flourishing, doing the same thing eToro does. And okay, the big picture's there. Do they have advantages? Well, they're servicing the UK especially really well. That's where most of the revenues come. Perfect. And their valuation is there. Okay, great. They're small cap. Perfect. So my process is good there. The one thing that I think is the fly in the ointment is I'm buying near their IPO. And maybe that was the rule that I broke, that the market's charging me a lesson fee. Be careful if you're buying near the IPO date. And I didn't get hurt too bad. I think I lost $250 on that.
What was their offer price on the the initial public offering?
Let's take a peek.
Looks like it's probably around 52.
So they traded at 67. I don't know what their offer price was, but they first day they traded at 67. They
Yeah,
closed at 67, I should say.
it looks like they opened at 52.
Okay. So it didn't go
So,
crazy like
yeah.
Core Weave or Circle. Those have been crazy, and those become furnaces that you can burn cash and capital in. Core Weave and Circle. I like crypto, by the way, and I like cloud services, but those two stocks are like furnaces right now, burning cash. Looks like Rust Moments loves Futu. Good to see you. Thanks for joining. We got a lot of people on the stream. Thanks everybody for joining. We're looking at stocks, going deep, and we got a lot of members too. Good to see Mitch eToro. Surprise. I'm out. I'm gonna watch it. Braden, you love the chatter on Dave. I can understand why. Pretty exciting stock. Dwayne having a good day, making money on DLO. Mike, the dividend investor guy, working hard, maybe listening in the background. And those are some of the members that are out there. Thanks for joining, guys. We got a lot of other people on YouTube, on X, and appreciate you guys stopping by. So where do we go next?
RMBS was on the list. That's the last one I have.
Okay. So tell us about RMBS. Rambus manufactures and sells semiconductor products in the United States, South Korea, Singapore, internationally. It does DDR memory interface chips comprising of DDR5 memory interface chips.
What is the ticker?
So RMBS, Rambus.
Oh, BS. Okay, I've got it now. Chart's looking pretty strong initially. So we got a nice upward price movement since the April 9th. Maybe April the 8th after the tariff announcement. So that looks really strong. Trading above the 20, 50, and 200, which are all upward sloping. RSI had a small dip here under 50, but predominantly it's been under or over 50 since April. PPO looks really good. Positive territory. Accumulation looks very strong. Here was the minimum in the past year, and it's been rising. Had a slight decrease here in the last month or so, but the money flow is positive. It's outperforming the SP 500 by 47. It's outperforming technology sector by 38, outperforming its industry group by 20, and the industry group is outperforming the S&P 500. So you have a strong company and a strong sector and a strong industry, and the industry is outperforming. Looks really good.
Yeah. Semiconductors obviously doing terrific, and as a whole, and this stock is doing terrific. The 1 year is the stock's up 77.45%, and it IPO'd back in 2021, and it's had a nice rise, 417%. $8 billion market cap. I like the size of the market cap. Looks really good. PE is okay because they're growing at 35%, accelerating that growth probably due to the data center build. Really strong 4 quarters. And they have a very good free cash flow and gross margin rate, 81%. And then their free cash flow is 262. If I valued this company, we're going to probably get a small discount. And I mean, we're not sneaking up on the market here. The market's buying semiconductor stocks. So this one here is looking terrific, but man, I wish I would have bought it at 60 or, lower, because now it's priced near its intrinsic value. And if we have any kind of pullback in semiconductor, like this is proven in 2025, this thing can sell off fast. It can go from, in this case here, 68 down to 42. So that was about a 50% haircut. And then it rose nicely. But for me, I'm being careful with semiconductor. It's just priced so expensive. And I've invested in semiconductor for a long time. I've kind of observed the cyclical nature of the business. I've seen boom periods that look like so incredible. Now, I've never seen anything like what we've experienced over the last 3 years. This is incredible. It's like, wow. Companies are paying $30,000 per NVIDIA unit for their GPUs and buying like 5,000 of them. It's like, whoa, that's what you call demand. And RMBS is flourishing because that data center is being built out. But we can't build data centers at the rate we're building them for the next 10 years, or a lot of businesses will go bankrupt. There's just no way around it. So I think they're going to be built for maybe a year or two. And then where's the demand going to come from? For RMBS, for ALAB, for NVIDIA. So there should be an end to the party at some point in the future. I don't think it's going to happen in 25, maybe not even in 26, but I think 5 years from now, it's going to be a different market. So Carlos, good morning. So you want to look at INOD. So what is INOD all about? INOD is INOData. INOData operates as a data engineering company in the United States, UK, Netherlands, Canada, and internationally. The company operates through 3 segments: digital data solutions, Synodex, and agility. Okay. They're a technology business. They do technology services. Taking a look at their website. So they do generative AI, traditional AI. So I haven't heard of this company. So data collection. Okay, this looks good. This looks interesting. Okay. Whoa. Yeah, that's pretty good performance. All right, let's see if their fundamentals are up to 2,465% rate of return. All right, $1.3 billion in market cap. See, this is where you find humongous winners, is these small caps. If you can find a great business early enough, then you're going to be sitting on a rocket ship and it's going to make you wealthier quick. 1.34 billion market cap, revenues at 228. So not too bad on a price to sales ratio. PE doesn't look too bad if they're growing. We'll see where they're at with growth. Growth looks great. You see how it's accelerating?
Mm-hmm.
Okay. So customers like their software, their technology, their platform, they're using it. Okay, they had a flat quarter over quarter. situation here. So I would watch that. Actually, for 3 quarters, it's been flat. That's kind of strange. They kind of hit a ceiling. So they really grew nicely from one year to the next, but for 4 quarters, they haven't grown much. Over these 4 quarters, they grew about 10%, nowhere near 120, 126. So once the compare goes away, and now see the quarter they just closed compared to a quarter that was at 32 million. Well, the next quarter is going to be compared against 52. And if they show up with a $58 million revenue, it's going to be a little bit of a, oh yeah, we grew by 10%. So I'd look at, and we can look at that together, is look at their guidance and see if they're saying, yeah, we're going to stop growing, which should be good information to have, because if you're expecting they're going to keep growing, well, are your expectations going to be met or not met? So let's take a look at their guidance real quick. So this spot is super small. So if you can read it, you can be a pilot, you can be a surgeon. Let's see if I can make it a little bigger. That's a little bigger. Okay. All right. So revenue increased nicely. EBITDA. I want to see guidance. Okay. So our beat and raise quarter undermines generative AI space. Okay. All right. So I'm trying to find where their guidance is on their earnings. Okay. They didn't give any. So not at least not on the press release. So let's take a look at what analysts are expecting. So analysts are seeing the slowdown, and they think they're going to slow down to like 22% and then 5%. Now that's a big surprise, because we're early on the development of AI use cases and having agentic AI, where you have all these agents working and doing stuff that humans are currently doing, maybe some trivial things, some simple questions. And I know for me, I've begun to use AI in a business environment, and in some cases it's been useful. It's been like, all right, cool. I used to have to talk to somebody to get that piece of information. I don't have to do that anymore. So that did save, in that moment, I don't know, save 5 to 15 minutes. Well, you do that 3, 4, or 5 times a week, and you saved an hour or two. That's an efficiency gain. But this is kind of it's something that I'm worried about or cautious about. Is, well, you're growing like gangbusters, but why aren't you growing anymore? Why are you hitting a wall, a ceiling of growth? That one requires more homework. All right, so when we look at their free cash flow is 36 million. It's probably going to grow at, I don't know, 20%. So I'd probably say I could probably go 20 to 30 times free cash flow, and that would be 720 to 1.1 billion plus cash or minus debt. And they have net cash of 55 million. So they're valued too high. The market cap's too high. The best I can do is maybe get to about 1.1 billion, The reason for it is they've really gone up in price while the forecast for revenue is not looking good. They've hit a plateau. So that means their revenue isn't going to keep growing as fast. Maybe it grows a little bit. Free cash flows aren't going to grow. And more concerning is, why are they hitting a ceiling? They're in a red hot space. More businesses should be finding the software and saying, hey, this product looks interesting. This product, I don't know if I'm going to get back to their product. So why aren't their services being bought by more businesses? That's requires more homework. I know what they're talking about here. Generative AI, right? These are large language models. The models, you interact with them and they give you responses. Well, this is a red hot space. And this is very interesting as well. So this one here is overpriced, in my opinion. What are their margins looking like? So their margins are lower. I think these guys are a services company. And that's how they read off their website. So they're not a technology company. They're probably, and that's why their gross margins are lower than a pure play technology company. We just saw RMBS, a semiconductor company, in the 80s. This one's at 42%. This is professional services, and professional services should not be priced like it's just going to go up parabolically, because in order to grow, you have to keep hiring people. You have to keep expanding your workforce, and it's not as efficient as Meta getting another 500 million users. Well, they don't have to do much more other than maybe put some more servers online to handle the additional workload. Or, other businesses like YouTube. What if YouTube gets another 1 million or 100 million viewers of YouTube? They don't have to do much more. But these guys, if they get more volume of work, they have to hire people, and that's expensive and it takes time, and they've hit a wall. So there's some things there that I'm worried about. So this one here, I'm not going to say it's a sell. I'm not going to say it's a big problem company. I would say it just requires a lot more homework to really get into the company, understand it, and understand if they have an exciting future. If they do, maybe it's a consideration. But boy, you are paying a pretty big price for a company that is a small cap that has lower margins. What do you think, Daryl?
Same thing you do. Let's see why on the charts. So we had a jump up in price in November of last year, and it has literally gone nowhere since then. And I was looking at this. There's a lot of buyers and sellers, but the price is about exactly where it was in November. So I added these price by volume by price bars, and that right there confirms that action. So all of these grays colors here are buys. There's actually more sells at this price than buys. So it's about split in half with more sellers. And over this time frame, which is a year, I mean, most of the buys are, between 35 and 55, and we're sitting at 42. So
Yep.
What does all that mean? I would need to see a breakout of at least 52 before I would even consider stepping in from a purely technical perspective.
Got it. So thanks, Carlos, for asking about INOD, and hopefully you found our review interesting. Man, good questions coming out, everybody. Thanks for joining. All right, so there's one stock. It's kind of a little bit of a old school semiconductor stock, Qualcomm, QCOM. Can we take a look at Qualcomm?
Looks like the last 5 days have been pretty good. We've got 3 hollow candles here in a row. And what a
All right,
hollow
hold on a
candle.
second. Please tell me, what is a hollow candle?
Yeah, that's what's next. A hollow candle is when the close is above the open. So we have 3 days in a row where the price was in all of these except for today. This opening price looks to be above this closing price just a little bit. But anyway, it opened up and then it traded higher all day long.
Nice, and it's up
Basically what
today.
that.
It's up 1% today.
Yep. So we have 3 hollow candles in a row. The RSI has moved into positive territory. We've had a crossover in the PPO. We're still in negative territory, but if these prices continue here over the next few days, we'll be in positive territory. Accumulation is starting to pick up and the money flow. It's kind of in no man's land at the moment. But I mean, over a very short period, a week or so, they're actually looking pretty strong.
All right. Well, let me mention a few things about Qualcomm. So, attention value investors. I'm going to talk about a pretty good value stock here that is in semiconductor. It's growing. It produces a lot of profit and a lot of free cash flow, and it pays you a dividend. That company is Qualcomm. Qualcomm is best known for if you have wireless equipment, if you are picking up your iPhone, you're picking up some Qualcomm technology. If you're the military and have a lot of wireless technologies in your arsenal, you're probably using Qualcomm. They're down in San Diego. If you don't know, San Diego is a big military town, big Navy town, and also a big Marine town. Huge. Camp Pendleton's huge. So these guys have really operated in that connectivity, wireless zone. And they're now diving into PCs. Their Snapdragon chip is going into PCs. So as we look at this, right, we're talking about semiconductor, but we're talking about a semiconductor stock that is down 6.61% because the market, and it is true that they're not in the data center. That is a fact. And right now, the story that the market's buying is semiconductor companies that sell into the data center are flourishing. That is correct. This is a $170 billion market cap company, which seems like a pretty small size. Revenue is 43 billion, so you're paying 4 times revenue for the company. Not bad. PE is nice and low, 13. I mean, value investors are like, "Oh, hey, now you're speaking my language." 2.25 dividend. Now, when we look at the revenue growth, you got a big business growing at 15.8%. We got nice green on the screen. We go to the quarterly. So that looks good. I don't think they're going to set any records, but the reality is that, the handheld market, it's the handheld market. Everybody has some phone. I just updated my phone 2 months ago, 3 months ago. I went to a Samsung device. It has a lot of Qualcomm in it. And Qualcomm is selling into Samsung, Apple, all these big brands. Now, looking at their fundamentals, free cash flow, look at that growth. That's a good looking chart. Cash flow keeps growing. Gross margins of 55.68. Now, why is that lower than a traditional or a typical semiconductor company? Is their military business. The military forces contractors to go cost plus and have these limits on the profitability you can make on the military and government contracts. So I think that's shown up there. But overall, good profit, net profit, and very good free cash flow margin. So those things look terrific to me. And this is kind of a stock that I own it with the intent that this is going to be a long-term hold. I see that their market's just going to continue to get bigger and larger. I don't see any problems with the business. I think the business is fine. Just the market's in love with data center related semiconductor companies, as it should be. NVIDIA is a very handsome stock and it's gone up a lot. So I'm typing in NVIDIA. See, I'm even thinking about the data center. But Qualcomm discounted 45% because these cash flows are just so darn high. But the market, again, doesn't consider Qualcomm a data center company, so it's going to ignore it. But look at those discounts. Value investors are like, hey, I'm a long-term investor. I'm good buying into a stock when nobody likes it. Nobody wants to buy it, and I get a really good price on it. Even on earnings per share, it's discounted. So Qualcomm is non-exciting semiconductor stock that is really nice for maybe a older investor that likes technology like me, that appreciates it. Hey, I know Qualcomm, and the numbers they're putting up are pretty darn solid. And if they catch a break where the rest of the market pulls back from a semiconductor perspective, I think Qualcomm's going to hold its value quite well because it's not going to be sold off drastically like the other companies. So Qualcomm's looking good, and I'm glad to see that it's had a good 5 days. It hasn't had a good year to date compared to other semiconductor stocks, and it hasn't had a good year, but maybe it's going to come back. Remember, we saw the CSCO chart where it was kind of left behind, and then all of a sudden, boom, it took off. So we'll see. We'll see if it takes off. I'm got a pretty good size position on Qualcomm, and I also own A-Lab. A-Lab is the rock star going up super fast. Qualcomm is the good, dependable stock in semiconductor that I own as well. So Mike is in Qualcomm.
Let me show my screen one more time if you can switch me over.
You got it?
Just to explain those hollow candles. So I switched to an intraday chart. So you can see that it's closed here. This is the third day with a hollow candle. So we closed here. We opened up and it basically traded higher and ended up closing higher than it opened. Hollow candle for the full day. The next day, we did the same exact thing. We opened and then closed higher. So we got a hollow candle. Now today we opened at 154 and it went up to 156. So it opened up lower, but it's still higher than this low. So you'll still get a hollow candle. If it goes the other way, like this right here, that's a filled candle. So it tells you, even though we were looking at a 1-day chart and you can't see what the intraday was doing. So, I mean, I know that it opened higher than it closed because it's a filled candle. So I know what had happened intraday even without looking at the intraday.
Cool.
So anyway, just a little.
Other people in the chat didn't know what hollow candles were either. So it's good to learn from you, Daryl.
Well, it does give you a lot of information. When you see 3 days in a row, or maybe you have 5 out of 8 that are filled, I mean, that's telling you that people are coming in and they're buying all day long. They're buying throughout the day. If you see filled candles like here, you know they're selling. Here's 1, 2, 3, even though we had 3. So that was about half and half. But these candles are much bigger than these candles here. So I know that was just a big sell off. But anyway, the more hollow candles you get, the better it is, because people are buying throughout the day.
Nice. Hey, Daryl, newsflash. The market's going into the green.
Yeah,
S&P's in the green, Nasdaq's in the green.
portfolio is getting pretty close to doing the very same thing.
Very good. Very good. Yeah, this market, it's pretty incredible, and I'll just keep watching it, try to keep adjusting and making money. All right, so we got a question for you, sir. Looks like Braden. Question for Darrow. What are the most important technical indicators for a stock about to make a move?
Well, I'm a big fan of breakouts. So I'll just use some examples where I actually purchased some stocks on breakouts. I'm going back in my brain here, so give me a second. Okay, so here's one on NVIDIA, and I use this example quite often. Back in late December of 2023, I was working with some younger investors, and they didn't want to go into NVIDIA because it was trading at all-time highs. So we had a discussion over several weeks, and I told them once it broke above this basically 2-month pattern, where it was actually 1, 2, 3 times it kept trying to break above this level. Once it did, I said, this is the time to step in. And I did. I bought and rode this entire run for 3 months and almost doubled my money in 3 months.
Nicely done.
Then it did the same thing again. So we had these tops here, and it broke out and ran that for a year and a year or so.
Mm-hmm.
Peaked out again, and now it's broken out again. So people were telling me it was too expensive here, telling me it was too expensive here, telling me it was too expensive here.
Well, sorry, Daryl, but I agree with everybody that told you that was too expensive.
Yep. And sometimes people,
the money spends the same, right? If you make money and people said that you couldn't do it, it spends the same.
Exactly. And one of the things you have to do on stocks like this is manage your risk. When you buy, know what price you're going to sell it at. And if it goes to that point, get out of it, because you probably made the wrong choice. And even though, Victor, I agree that the fundamentals at one point were saying that it was too expensive, they have grown their earnings into those fundamentals, at least at some of these prices down here. They actually built themselves into those fundamentals. So anyway, I don't know where this thing's going to go, but I have an exit price on my chart, so I know when I'm getting out, because I don't fall in love with companies.
Okay. So let's come back to Braden's question, because I want to make sure you really specify the indicator that you just tracked. Great segment. Great job. So let me try to recite what I think I just learned, and then you correct as needed. So you saw it break out, and it broke out of a trend line, and that breakout caused you to be bullish and feel like, hey, this stock's going to go higher. So the indicator is it broke out of a trend line
Yeah,
to the upside.
that's a pattern that it broke out of. But look at the RSI. It went from below 50, shot up in just a couple of days to an overbought condition, which it stayed in for 6 weeks. So I've had people tell me they would never buy a stock with an RSI over 70. That means it's overbought. But it did that for 6 months, and the price went from 47 to 87.
Okay.
So when somebody tells me they would never buy it, it probably tells me that they don't have a risk management plan. You have to know when you're getting out if it goes against you. But I have several stocks like this. Let's go to Costco. I don't know if I saved that chart. No, I didn't save Costco. Costco was the same exact way. I was having the same discussion with these two young guys about NVIDIA and Costco at the same time.
Well, that's great that you're talking to young investors. You know, one of the things that is I really get gratification from is there's a lot of young investors that subscribe to my channel and are members of my paid membership. And let me just, cut through the chase. If you're 20 something and you get lessons from a 50 something person that's done it for 30 years, you're getting the cheat codes. You're getting, information that I had to pay the price of learning it, making mistakes, and I want to pass it on. So, all investors, it's great that you're observing, learning, continuing to invest. I'm 56, using Warren Buffett's timeline. I got another 40 years left in me of trading. So I've got a long ways to learn. But it's great to see a lot of young investors engage, ask questions, so you can learn. And if you become better and better every year, by the time you're 35, you're really able to use your investments as a wealth expansion part of your economic life. You could have a great career. You can have a great career and on the side have this portfolio just grow more and more wealth for you. That wealth could help you buy a house. It could help you do things that you want to do. Send a kid off to college and let them go to whichever private school they want to go to. You can go to Europe every year, all kinds of fun stuff. But the key is learn, keep learning. I think Daryl has a lot to offer. I hope that I have a lot to offer and try to help people. But try to learn. If you're young or whatever age, keep learning. All right. So we covered. You wanted to cover something else?
Yeah, I keep track of all of my trades as well, just so I know how I'm performing on my trades. But I have an 82% win rate, so you don't win them all. But I've made a whole lot more money than I've lost on the 5 trades that I lost on. I only lost $500 because I get out. But when they are working and they are going up, my risk management plan keeps me in these things as long as possible.
Good. All right. So Noam wanted to ask a question. Let's take a look at DT. So
right. Let me go back to.
I'll jump on the stage here and give you a few minutes to get that set up. So Dynatrace engages in the advancement of observability for digital businesses, which transforms the complexity of modern digital ecosystems in North America, Europe, and the Middle East. So Dynatrace. Okay. Market cap 14 billion, revenue 1.78 billion. Okay. So you're paying 7-8 times revenue, PE 29. All right. Over the 1 year, the stock's flat. Over the 5 year, 26% rate of appreciation. Not a winner, judging from what the last 5 years have looked like. I don't understand why the stock price isn't moving. If you just look at revenue, you'd think, wow, these guys are doing quite well. They're doing very well. They're attracting new customers. They're selling more stuff to the existing customers. Interesting. Okay. Let me visit their website just to get more into their zone. What do they do? So Dynatrace. So understand your business like never before. So I know what this is. Infrastructure observability. It's like all your workloads in the cloud or wherever they're at. And business analytics. Okay. I understand that. Okay. Got it. Okay. I have a sense of what they do. Software company. They're headquartered in Massachusetts. The revenue looked really good. They're growing, almost $2 billion in revenue. Free cash flow has grown really, really nicely. Nice, smooth data, with the exception of 2020. But 2020 is a complete pass in my book because we had a giant pandemic. Gross margin, 82%. Very, very nice number. I'm seeing some really good quality numbers here. So that looks good. So these guys operate in the data center. Why isn't their stock price going crazy? Let's look at their balance sheet. They have lots of cash, 1.26 billion net cash. Okay. That looks terrific. Analysts, 22 of them. They think it's 31% discounted. The most pessimistic analyst thinks it's a $44 stock. The downside risk isn't very bad. Best case analyst thinks it's a $70 stock. Their consensus forecast is this business is going to keep growing at a nice rate. They're going to be a $3 billion revenue company in 2029. The earnings per share is going to be, man, this looks great. Why isn't the market buying this stock? The fundamentals look terrific. Did they do something bad? Did they get caught up in a bad story? So this is a concept in public cloud, Kubernetes observability. It's a newer development concept. Okay. This is a good one. This is a very good one, Noam. We're running a little bit short on time, but I can tell you this is a very good stock. And one that I'm going to do a kind of a deep dive in, and I'll share the results with you. But I'm going to do it offline. I've got to get going. I got to start my day. I already started my day, but I got to get to the next thing I've got to do today. Just based on free cash flow and based on their growth rate, this is a $15 billion value business. They're at 15 billion, close to it. So I'll have to do a deeper dive and understand why, if these guys are in the data center, why aren't they? I mean, this kind of makes sense if the market got excited about data center. So I'm going to do my homework on this one. So what are you seeing on the charts for DT?
So there's a saying, fundamentals tell you what to buy, technicals tell you when to buy. So keep that in mind. So this may be a very strong company, but if you bought 1 year ago, you are sitting almost exactly where you were 1 year ago. If you traded it, you probably made some money. But if you bought and held, you're sitting exactly where you were 1 year ago. So keep that in mind. They're not paying you a dividend, so you're not getting paid while you wait. I'm an income investor. So if I'm going to buy a company that I'm not trading, that I'm buying and holding, they're going to pay me something to wait. So keep that in mind. So the fundamentals, we go over here to fast graphs. If you overpay for a company, let's say you bought back here in 2021, you're sitting on a pretty sizable loss, 41% or so. So the company is good, but knowing when to buy is just as important. So if you bought this company in 2024, you're not sitting on a huge gain at this point. Look out a couple years, maybe you'll do a lot better. Be up 50% or so if these growth rates down here hold. But knowing when to buy is just as important as what to buy. That's my last lesson.
Yeah, I agree with you. And another way that I think about it is there's some businesses where those are just really good businesses. And if you're patient, the market will have sell-offs. And you can take advantage of those sell-offs and buy into those stocks. It's a pretty simple concept, but you'd be amazed. You get those offers like a couple of times every couple of years. Okay.
Yep.
So keep that in mind that, hey, Microsoft, I took advantage of a big dip in 24, bought it, made some money, and then I, like a knucklehead, sold it. Should have kept it. But that's an example. Or Netflix or Meta, or, I got a list of 20 stocks I could say those are really good businesses. And then they had a really good dip. I was able to buy them at a really nice price and made money. All right. So let's kind of wrap up the show. This was a great stream. Thanks, Daryl. Appreciate your time. And everybody, thanks for tuning in. We had a lot of viewers. Really appreciate everybody showing up today. Market is going a little higher. Let me take. Oh no, it's down again. Oof,
Yeah.
Spoke too soon. But we'll see. We'll see where it trades. Hopefully, it trades higher. But my portfolio is hanging on. Well, as I speak, it keeps going down a little bit. Now it looks like I'm going to go. I'm up $168 as a whole. I'm in the green. Yay. But this was really good. Let's keep doing this. I know next week we're going to try to stream together on Wednesday. So if you guys want to see Daryl again on Wednesday, in the meantime, go to his channel and you can see a lot of good content. Be sure to subscribe to his channel. I think you'll be better off doing that. So with that, sir, I wish you a good day. Thanks again for doing this stream with me.
Victor, thank you for hosting, and it's my pleasure to be here and contribute. And thank you to everyone that took the time to stop by.
All right. Everybody have a good day. Take care.
Take care.